So the Fed holds steady on interest rates. Here's what you need to know. Fed spokesman Jerome Powell spoke yesterday and highlighted that inflation has been on a steady decline for the past 6 months. However, the Fed is cautiously optimistic and wants to see this trend continue for a sustained period before considering a rate reduction. Powell emphasized the importance of keeping a close eye on inflation. Now, it's not just the current numbers they're looking at, which are good, but they want to make sure inflation stays on track for its 2% goal. Now, some of the good news from Powell was on the economic front. The Fed acknowledges that some of the supply chain issues that have plagued this country since the pandemic are starting to dissipate. And additionally, the jobs market is steadily increasing to pre-pandemic norms. Now, Powell was asked to address the rising housing and rental costs. Now, when asked, Powell reassured that the main focus of the Fed was to lower the overall living costs for average Americans. Now, he also went on to say that a slowdown in real estate sales was not a contributing factor to whether the Fed was going to lower interest rates. Now, just to put it in perspective, last year in 2023, there were less homes sold than there were in 2008. Now, most importantly, Powell went on to say that there was no timeline for a potential rate reduction, and also stated it was not likely to happen by the next Fed meeting in March. So what are your thoughts on what Powell had to say? Drop your comments below and let's have a discussion on what I think the real estate market is going to look like here in 2020.